All right, guys. My name is Abe Forest from Lagos, Nigeria. Today, 26th of June, 2026. We need to talk about some economic indicators. We call it economic metrics that makes up our decisions in the market. And starting from what I call the technical bias. Yeah, the technical bias, it begins from your 4-hour time frame and your daily time frame. Looking at the direction of the market technically, we know the chart, gives us patterns, gives us trends, tells us where the market is going, whether it's going uptrend or it's going downtrend, or the market is going to be ranging or consolidating. That is what the technical analysis is going to teach us or tell us as an investor. You need to be able to look out for trends, whether the market is bullish or the market is bearish. Now, looking at what we have on our screen, dollar is the benchmark currency globally, and whenever the dollar is strong, then it means that every other currency will not be as strong as dollar, because being the benchmark for every other global currency. Looking at what we have, all the information, all the economic metrics that came out this month were very strong. You understand? Yes, we know that there's inflation, but the expectation, we kind of beat the expectation, what people feel about the American economy. Some information came out to beat those expectations, starting from the institutional activity bias. Now, when we talk about the institution, we're talking about, now I'm going to take it globally, the HSBC, the Goldman Sachs, the Citibank, the Bank of America, the Swiss Bank, the Royal Bank of Scotland, the JP Morgan Chase, the Barclays PLC. These are institutions. I call them the banking institution. Also, we have hedge funds. We also have some big institutions. We need to follow the trend where the money is going. Now, do you know that all these hedge funds, they lodge in transactions to all these banks that I just mentioned, and it's very, very possible for these banks to know where the money is going to. These banks usually bring out newsletters. They tell us the direction, what these hedge funds and other institutions feel about the market, what they are buying, where is the money going, because obviously they have to go to the bank to lodge in the check or whatever if they want to buy some assets, like probably the money is going to cryptocurrency. We want to know which type of the financial market that the money is going through. These banks see all these lodgements, they know where the money is going to. For instance, if the SpaceX is approaching to buy a particular asset, these banks usually see it from the back end, because they usually lodge in those checks. From there we can be able to know where the money is going to. That is why we look at institutional activity bias. What are the institutions buying? Now, we notice that the institutions are having a kind of bullish momentum as what dollar is saying. It means that people, the institutions are delving towards the dollar. That means that they are buying dollar related assets, which is the bonds. Because there's increase in interest rate and the bond yields are increasing. Not just the bonds, we will look at what the market are buying in the short term and what the institutions are buying in the long term. But in the short term period, we notice that the market is bullish, as against like the dollar market is bullish. So that means that the dollar is attractive. You understand? So that is what we call the COT net position. We call it the commitment of traders. Then we look at the economic growth bias. Now, when the GDP growth information or report or data came out, it was better than expected. The forecast was 1.60, but when it actually came out, it went against, it actually triples the forecast, which is what 2.10, doubles rather. It doubled it. Now we talk about manufacturing PMIs. All these data are data that tells us what the economy is doing. I already talked about institutional activity bias, but now we're talking about the economic growth bias. Now, what are the things we use to quantify the economic growth? The GDP, the manufacturing PMIs, the service PMIs, the retail sales, and also the consumer confidence. these 5 items are what we use to quantify the economic growth bias, either quarterly, either monthly, either yearly. So all these things are what came out bullish. It came out positive, more than what we expected, which is the forecast. Then looking at inflation bias, you notice that yes, there's inflation, but people are delving towards an asset that is reliable when there's inflation. We call it safe haven. Dollar now is a safe haven for every other from every other asset. If you go to gold is coming down, it's not attractive. Silver is not attractive at the moment. Majority of all these markets are not attractive. Only the dollar is attractive at the short run. Things can change in between a day or 2 or 3 days, or probably a month. But presently, as we speak, the dollar is very attractive. Inflation bias, when we look at the CPI, we look at the PPI, we look at the PCE, and also the 2-year yield, all are being bullish, except for this. Okay, the CPI is just neutral. Likewise, the PCE is also neutral, but the PPI is bullish. Likewise, the 2-year yield is also bullish. Then the last one, which is the job market bias, it is bullish because the non-farm payroll came out better than expected. Also, the weekly jobless claim came out better than expected. Also, the ADP employment change came out better than expected, and the JOLTS job opening came out better than expected. So it makes the dollar very attractive. Now, going to the charts, let's go to the currency, other currency. Now, Euro USD has to come down because the dollar was strong as against Euro. The GBP USD too has to what? Come down because it's on the quote side. Has to what? Come down because it's very, very attractive. The dollar is very attractive. Let me go to GBP USD so you can see. Any pairs that is by the right hand side at the quote side has to be what? With NZD USD has to go down. AUD USD has to go down. If the dollar is trending upward, every other asset must trend downward because the dollar is attractive at this point. You understand? Anything can change in between some minutes, or let's say some hours. But in the short run, we can see technically that the dollar is very, very attractive. And once it is attractive, it means that the dollar index has to move to the upside. Likewise, the every other asset will move to the downside, provided it's by the quote side. But if it's by the both base side, like the USD JPY, the USD CAD, it has to trend to the upward direction. So that is that about this. So I'm going to be seeing you guys in another episode. See you later. Take it easy. Bye.